Good morning, and thank you for joining us for Ask a QuickBooks ProAdvisor. My name is Amy Goldfine-Connor. I'm a Senior Marketing Manager here at Webgility, and I'll be your host today. Here's our agenda for the next hour. I will start by quickly covering some housekeeping items. I'll give a brief overview of Webgility and our solutions, and then I will introduce our two QuickBooks ProAdvisors. We'll start the conversation with some of the top QuickBooks questions asked by e-commerce businesses. Then we'll answer your questions, both ones that you submitted when you registered as well as those that are asked during the presentation. We have a lot of questions submitted already, and I'm sure you have more, so we'll do our best to get through as many as we can. If we don't get to your question, we'll try to follow up with you after the webinar. All right, on to housekeeping. Everyone is set on mute. If you have questions, please submit them via the question panel. And if we don't get to your question, we will do our best to follow up after the webinar. And yes, you will receive an email in the next day or so with the webinar recording. So if you missed something or want to rewatch the presentation, it will be available for you on demand. All right, so let me tell you a little bit about Webgility. We make software to connect and unify multi-channel companies to have better perspective and make smarter decisions. Our solutions help e-commerce owners improve productivity, see and understand their financials, increase profits, and get back to doing what inspires them. Our flagship product, Unify Enterprise, allows you to bring all your e-commerce data together so you can automate your workflows, manage orders, control multi-channel inventory, and reconcile your financials so you can simplify and scale your business. So now let me introduce our QuickBooks ProAdvisors. Chris Robinson is a Gold Certified ProAdvisor for QuickBooks Enterprise and QuickBooks Online. He leads our onboarding team and conducts both accounting consultations for paid customers and product demos for businesses interested in our solutions. Hey, Chris.
Hey, how's it going today, Amy?
Great. Thank you for being here. We also have Susan Hawkins. Hi, Susan.
Hi, Amy.
Susan is a Diamond Certified ProAdvisor for all versions of QuickBooks. She has been an Advanced ProAdvisor since 2009 and is also a CPA. And in 2014 and 2015, she was selected as a top 100 ProAdvisor. Way to go, Susan.
Thank you.
So let's get started. So Susan and Chris, there are several questions that you often get from clients that are applicable to many e-commerce businesses. And we're going to start off by going through them. So the first question is, what is the difference between a sales order, a sales receipt, and an invoice? Chris, you want to take this one?
Sure. So a lot of people get confused about the different sales transactions that you can use in QuickBooks. First of all, let's tackle the sales order. A sales order is a non-posting transaction. It's basically a request from a customer that they may want to purchase something. It's very similar to an estimate. The nice thing about a sales order is you can convert it into a purchase order or into an invoice with just 2 clicks of a button. Once a sales order has been converted into an invoice, that means that you've sent product to them, but they haven't paid you yet, that they have maybe net 30 terms or some other payment that is going to be received at a later date. So the value of an invoice, instead of going into a bank account, goes into your accounts receivable account. Once the payment was received, that amount moves from accounts receivable into undeposited funds or bank account. A sales receipt is basically a paid invoice. So the amount never hits AR. It means that as soon as you gave your customer the goods, they gave you the payment. So that amount of money goes either directly to undeposited funds or a bank account.
Awesome. Thank you, Chris. That was very helpful. The next question is about item types. Susan, will you explain the different item types and how to set them up in your online store in QuickBooks?
Sure. So QuickBooks gives you a few options in the desktop software where you can have inventory parts or non-inventory parts. Inventory parts are going to end up on your balance sheet. You get to select, where they're going to show up as an asset type, and then every sale is going to take one item out of the asset and put in your cost of goods sold. A non-inventory part, typically, that's a smaller dollar item or maybe a large volume with, like screws that are going into something. You maybe don't want to track all your individual ones. So those often are considered a non-inventory part, and they're just going to, be expensed when you purchase them. Two other options that you have, depending on your business and, your need for them, you can set things up as a group. or an assembly. And a group items, often you will sell the individual item, or you can sell it as part of a group, like maybe a gift basket. You know, one of an item here to an item there. They're grouped together, and then you might have a discount that's being offered if you're buying as the group. And then an assembly, that's not as common. That's really when you're building a finished good from your existing raw material parts, or maybe you've got an item that you need to add services to, and that then becomes an assembly. And again, that's the desktop. You have less options in QBO.
Okay.
So one of the rule of thumbs that I tell my clients is that if it can easily be taken apart, like a gift basket, and put back as individual items, then it's probably a group. If it's hard or almost impossible to take it apart, like a bike that's been put together, then it's probably an assembly.
Oh, that's a good way to think about it, Chris. And thank you, Susan. So the third top question that we have if from many e-commerce businesses is how to keep their books straight when they're selling on a marketplace like Amazon. There's a lot more details and a lot more complications when you're selling on a marketplace versus selling on your own online store, although many businesses are multi-channel and selling on marketplaces, store, in person, etc. So we did have a question submitted about how to reconcile that physical bank deposit and Amazon records with their QuickBooks Undeposited Funds. Chris, can you answer that and also just give some general tips on accounting with Amazon?
Sure. So Amazon's very special and can be very confusing. One of the hardest things to reconcile with Amazon is that when a customer pays you, Amazon does not deposit the full payment. They take out their expenses and fees before they deposit that money into your bank account. Also, people who are selling on Amazon are typically high-volume sellers. For that reason, I usually advise my clients to use a clearing account. A clearing account is a specialized bank account. So if you're in QuickBooks, you just make a new bank account called like Amazon Clearing. I then would have all sales receipts or received payments from Amazon customers be deposited into that clearing account. Then, at the end of your 2-week settlement report, I'd look to see how much expenses and fees I've been charged by Amazon and make a single bill for that amount paid for out of the clearing account. The third thing you're going to have to do is when you figure out how much money Amazon actually deposited in your bank account, you do a bank transfer from the clearing account to the bank account. So to recap, total income goes into the clearing account. Then you subtract out the expenses and fees that were charged you in that 2-week period by your settlement report. So total income minus expenses and fees should equal the amount of money that hits your bank account. So once you do that transfer, the clearing account should clear down to zero, except for it never will because of timing issues and the fact that you always are going to have new sales coming into that account.
Great. Thanks for that, Chris. Sounds like Amazon's a little complicated, but I know it's really important for sellers to really get out there and be on as many platforms as possible. So they got to overcome those accounting challenges. So the last top question is about inventory, and I know inventory is a huge challenge for retailers and for e-commerce in particular, and sometimes sellers get in a sticky situation where their accounting software shows negative inventory. So what do you do when you run into that problem, and how do you prevent it in the first place? Susan, you want to take this?
I do, and I bet if we did not have the audience on mute, we would have heard a big collective groan on that question.
I'm sure.
So negative inventory I see all the time, and it's very bad, and you don't want to ignore it. QuickBooks does a lot of fancy calculations for you behind the scenes, and if you've got a negative inventory count, that's just going to kind of snowball with your cost of goods sold behind the scenes and create a big problem. So the best thing to do is a physical inventory adjustment. Ideally, it'd be great if you could go do an accurate count and get it all going on. I know that doesn't always happen. Year-end is a good time for things like that, but at a minimum, you want to go in and do a physical inventory adjustment and correct that. And even if you need to guess, you just want to go with a higher number, a positive number that's going to correct that negative count and keep it from dragging along, throughout your accounting records.
Okay.
So something I always mention to people is the reason why you have negative inventory in the first place is that your workflows have broken down and something is not being recorded accurately. It's important to remember that QuickBooks should mirror what's happening in the physical world. So if you have a negative inventory count, you're probably not receiving in inventory when it comes in, is usually the number one reason why. So take a look at that, make sure that you're actually receiving items correctly.
Good point, yep.
Absolutely. And I also wanted to point out that we had a webinar earlier this year with Chris called Help, I Have Negative Inventory. So if this is a struggle for you, we highly recommend watching that on our website. If you go to webgility.com/webinars, you'll see it there and you can watch it on demand. So that rounds out our top questions. So we are going to jump right into the other questions that were submitted during registration and have come in during the webcast so far. Looks like plenty have been submitted in the questions panel, but if you haven't seen that already, that's on that right-hand panel, and go to webinar and you can submit your questions there. So our first question is from Anna, and she would like to know about when should she use journal entries.
I would say never. QuickBooks is designed for non-accountants, so your average user really should not be making a journal entry. If you feel a burning desire to make one, you might want to just try and unravel the transaction that maybe was causing a journal entry in the first place. You know, if you have to go back and run a report and look at some invoices or sales receipts to see what went wrong, it's better to figure out the cause of the problem than to try and make a journal entry to fix something that may just recur again, or your journal entry, you know, went the wrong direction and then you compounded your problem. So I would really avoid doing journal entries if you can.
I completely agree with you, Susan. When I have a new client and I'm kind of doing some forensic analysis on their company file, one of the first things I check is their journal entries, because typically a journal entry is recorded to correct a mistake. It's important to realize that QuickBooks is a transactional-based program, so anytime money is moving from one account to another, it should be because of a transaction, and you really want a record to know not only that the money moved from one account to another, but why it moved.
Right, and that's a good point about the transactional record. If you're doing a journal entry, you're going to miss that. You're going to be kind of above the cloud on that one, and it's never going to get into the whole, you know, trail that you work so hard to create in setting up QuickBooks. Just not good.
Well, great answer. Thank you for that question, Anna. Our next question is from Russ, and Russ would like to know, what is the process for tracking inventory given away in an event? So he gives away books at a seminar and the registration pack for the attendees. So how would you handle that in QuickBooks?
I like that question a lot because I'm often asked that question. So an important thing to remember is you want to kind of get credit for, you know, giving away those products and also adjust your inventory count. So I would consider these, you know, a marketing expense. So when you're doing an inventory adjustment in QuickBooks, like we talked about with the negative inventory, you can go ahead and just adjust your count to reflect what you're giving away. And then you've got a spot where you can note the offset account. And for that, I would just point it to a marketing expense. And then you took care, you know, you properly recorded that, the marketing expense, and took care of your counts at the same time. Just remember, it's that cost you're doing. You don't get credit for the retail price of the product you gave away.
So I have a slightly different way of handling donations or giveaways or promo items in QuickBooks. The way I will usually do it is I'll just create a sales receipt, change the price of the item to 1 cent, just because QuickBooks doesn't like to see zero values in a lot of its calculations. And then I'll do a discount, discounting the total transaction down to $0. The reason I like to do it that way is it will then adjust the average profitability on that item if you run your item profitability report to reflect the fact that you gave away some items. I definitely think the downside of that, though, is it doesn't go into the marketing expense account the way that you described doing it, Susan. So I think it's kind of you have to decide as a business owner what's more important to you, knowing how much you have used for marketing expenses or knowing what your average profitability is on those items.
You know, and to go back to marketing expense, that was Russ's specific example. I often get these questions for people just donating items, and in that case, I think you definitely want to do an adjustment so you can point it to a contribution line and then take that as a tax deduction. But again, it depends on your business and what you're up to. So you have a couple options.
Oh, those are definitely all good things to think about. Sounds like interesting way to manage your business. So our next question is from Stuart. So Stuart is using a desktop version of QuickBooks. He's either using Pro or Premier, and he is considering switching to QuickBooks Online, but he looked at a comparison chart that Intuit provided, and it said if you have physical inventory that you sell, you should use a desktop version, that is Pro, Premier, or Enterprise. And he wants to know if QuickBooks Online tracks inventory and what are other inventory considerations between the different versions of QuickBooks. I know that as QuickBooks Online is getting bigger and Intuit's pushing it more, this is going to be a really common question. So I'm glad Stuart asked this.
So basically, Stuart, most people, when they switch from the desktop version of QuickBooks to QuickBooks Online, are a little bit disappointed. The reason being, QuickBooks Online is a simplified version of QuickBooks. So there are many features offered in the desktop version that are not there in QuickBooks Online. And there's a high probability that you'll be missing one of your favorite features. In addition to that, the way they track inventory is also very simplified. They don't have group items. They don't have inventory assemblies. They do not track average cost. A good way to think about the way inventory is handled in QuickBooks Online is it kind of tallies and counts up and counts down as inventory comes in and out, rather than doing a full real inventory tracking system.
Okay. Well, thank you for explaining that, Chris. Sounds like QuickBooks Online is taking things a little simpler, which sounds like it's better for smaller businesses, newer businesses, but when you start getting complicated inventory issues, they should, consider the desktop version.
Definitely. QuickBooks Online was kind of originally conceived for service-based businesses.
Okay.
Intuit did acquire this company called Lettuce that was a bolt-on to QuickBooks Online to have a more full inventory management, but they haven't implemented any of the features from that company yet. There's other third-party programs like, there's Lettuce, and there's also SOS Inventory that you can purchase, and those will really flesh out those inventory features of QuickBooks Online.
Okay, and obviously, Susan and Chris, you do not work for Intuit, but is it your opinion that you think QuickBooks Online will eventually grow and this conversation may be very different in a few years?
I think so. I think they definitely have made some improvements, but it's not there yet. And like Chris said, if you've been using desktop, you're going to be a little frustrated. If you're brand new to the game, you could probably make QBO work for you. But again, it's not compatible from inventory, and the reporting for your inventory is going to be weaker in QBO, which also can be a little disappointing.
All excellent points. All right, so we have a question from Matt, and he would like to know how he can receive payments accurately without using bank feeds.
I really like this question. Bank feeds can be nice, but they are not that accurate. They don't actually create real transactional records that show you why and how you purchase something. The main reason to use a bank feed is if you have a credit or debit card that you use to make business expenses that you wouldn't normally get a bill for, so isn't being recorded normally in QuickBooks. If you use a program like Webgility's ECC Desktop or Unify Enterprise, those programs will actually create transactional records for you, and you're going to want to exclude any income you get from your bank feeds or anything that you've entered a bill for from your bank feed. Otherwise, you're going to be double booking your income or your expenses. So if you do use a bank feed, be very careful about it. Otherwise, you want to actually be having transactions entered into QuickBooks.
Yeah, I think the double counting is key. I see that a lot, especially because ECC brings in the orders and it's fantastic, but people have been in the habit of just downloading their revenue from the bank, and it's very easy to double count things, so you want to be aware of that.
Excellent point. So we had a question come in from Perry. So we were talking earlier about QuickBooks Desktop to QuickBooks Online, but he is transitioning or considering transitioning from QuickBooks Online to QuickBooks Enterprise, and what advice would you have for him?
So what you want to do when you're making that transition is first run a balance sheet and an income statement for that day. Once you're done with the transition, in your new accounting software, run the same reports, and you want to compare them. Occasionally, when you make that transition, a transaction or two is dropped, and that will be reflected in your account balances. Usually, in my experience, it's in the accounts receivable account. Once you see that there's a discrepancy, you have to drill down and do some investigative auditing and figure out what transaction was dropped and then recreate it.
Susan, do you have anything to add about that?
No, I think that was a good summary. It is a totally different setup, so just be prepared. You're going to have some changes, some obstacles to overcome.
And is that something that somebody might want to consider hiring a QuickBooks ProAdvisor, such as one of yourselves, to manage?
Yeah, not to self-promote, but definitely there's some value in that because the platforms are very different. Even just the accounting for inventory is different. QuickBooks Desktop computes an average cost, whereas QuickBooks Online is FIFO, which probably some people just hung up on that, but it's very different. It looks at layers versus averages, and just the reporting is different as well.
Yeah, really making a transition like that, unless you're extremely savvy in both of the softwares, it is a great time to have an outside expert come in, not only to help you through the process, but to also train your team on the new workflows and the new things they're going to have to do with your new software.
Right. And it's also a good time, too, to take a look and just see how things are set up. Often, I often see people are just kind of getting along because, somebody like 4 bookkeepers ago set something up and then train the new person on it and so on and so on. And it was, less than ideal at that time, so they're kind of just carrying along some work processes that, it's a great time when you're transitioning to the new platform just to, do a whole big kind of reconfiguration and make sure everything's the way that you want it to be and optimized.
Susan, I think that's a really good thing to point out in general, and I hear this from Chris and the rest of our onboarding team, is that anytime you're making a big change, whether you're switching accounting software or you're implementing something like our solutions, sometimes you do need to take a step back and redo your workflows or think about your processes, which I know can be a challenge for business that's been doing the same thing the same way. But, we've seen many times that when a company, makes that change, and it's a little hard in the beginning, everything works out smoother, their accounting's better, their workflows are better, and they end up saving time and money in the end.
Yeah, it's important to remember that just because it's the way you've always done it doesn't mean it's necessarily right.
Definitely. All right, so we're going to move on to the next question from Matt. And Matt has a bank account that has not been reconciled in several months, and he only has the ending balance with no statement. How can he reconcile it? Or can he?
No, Matt's going to have to go dig up those statements.
Matt.
Part of the reason, often people just think doing a bank rec is just confirming that their QuickBooks balance agrees to the bank. And yes, that is part of it, but you want to see the activity behind it. And often, you're not just agreeing the bank balance, you're finding all these expenses that maybe you don't have already. And that's going to give you more reliable financial statements if you have confidence that all of your activity is in the file. And often it's not. So you really need to kind of back up. I usually suggest, if you have not ever done a bank rec, you have to pick a point in time to say, this is my starting point. I often will go back to the beginning of the year and say, okay, fine, this is going to be my first bank rec. If I had any variance coming into the year, I'm just going to make a big one-time adjustment for it. Often it's just an expense. People are pretty good about finding their revenue. Sometimes they overlook the expenses, and then you kind of need to work through month by month with your bank statement, which is very easy to get online, and just take the pain and go month by month, and you'll be happy once you're done.
Yeah, that's a really good point, Susan. It's just important to know that when you're reconciling, it's to really try to find discrepancies. You know, maybe someone sent you a check, you entered it into QuickBooks as a payment that was received, but then the check bounced and you didn't get a notification from your bank. Well, when you would catch that is during your reconciliation process.
Gotcha.
That's a good point about the payments. I see that a lot with if a customer payment has been received, but someone just downloaded the information from the bank feed and maybe not associated to the customer, that customer is still showing up as owing you money, and you've got the money in the bank, but you didn't know who sent it to you. So there's just a lot of treasures you can uncover in doing a bank rec. And agreeing to your bank balance is just, an added bonus. It's really not the goal. It's just finding all that missing stuff.
Definitely. So we have a question that just came in from Kayla. So regarding earlier, we talked about the different item types, and you talked about assembly items. So Kayla has assembly items where she purchases multiple components at varying costs and times. And she wants to know the advantages and disadvantages to updating the item record with the new cost. And what happens if she doesn't update the cost, and will that not update her average cost of goods? Whew. Did you get all that?
Sure.
Chris, you want to take that?
Sure. So what's important to remember is that cost field in the edit item screen is only used if you've never received the item on a bill. So when you receive the item on the bill, it not only updates your quantity in QuickBooks, but it also updates your average cost of the item. And once there's an average cost associated with an item, that's what QuickBooks will continue to use. So the answer to your question is just make sure you're correctly receiving those items on the Items tab of a bill.
Excellent. Thank you, Chris.
Chris, I'm impressed of your summary for that long question. That was really concise. That was good.
Thanks, Susan.
That's why we got him here. All right, so we have another question from Marlene. She would like to know, how do I make a pro forma invoice without affecting inventory or monthly sales? And could you also please, for me at least, explain what a pro forma invoice is?
So I believe what she's talking about, based on really what I'm keying in on is the without affecting inventory or monthly sales. Well, the only transaction that does that is a sales order. It's possible to rename a sales order to say pro forma invoice on it, on the template, but a sales order is basically a sales transaction that is non-posting and doesn't affect inventory.
Great. So we just had a question come in from Grant. Maybe, Susan, you want to take this. Grant would like to know, how do you record a warranty exchange transaction? Is there a proper way to do this?
I think I'd want to know a little bit more about the warranty. Often a serial number is involved, and then, yeah, I feel like I don't have enough information on that one. You would want to do, you could do on an invoice or a sales receipt, return one item and then just replace it with another one. Usually with warranties, they're tracked by serial number, and then you need to actually take that very specific item, the replacement, out of inventory, and then put your old serial number back in. So that's involved, but it's an involved question that would. Chris, can you summarize that better than me? I feel like I lost everybody on that.
No, I think you're exactly correct, Susan. There's so many different possible ways of dealing with a warranty, and there's so many different types of warranties. Like, is it an unlimited lifetime warranty? Is it based on when the sale was made? It's really hard to know exactly. That's something that we may have to take offline and talk to the person about what their exact warranty situation is, and then we can help advise them. There's a lot of workflows going on there that actually have nothing to do with QuickBooks at the end. But like you said, essentially it is a credit memo that you then apply to a new invoice to just send them a new item.
Yes, and then you may have to expense that old one to some type of warranty expense account, depending on what your supplier is doing. Yeah, that's a complicated one.
And then if you're refurbishing it, you may have to do an inventory assembly, transforming that item into a refurbished. So there's a lot of different things that can happen there.
That's very complicated.
Good question.
I'm very curious what Perry is selling that he offers a warranty. That may be a good question for you guys to take offline with him. So we have another question from George, and George, using a desktop version of QuickBooks, he wants to know the correct procedure for applying incoming shipping charges to a PO when they are not provided at the time of the order and need to be inputted later when received from a shipping company?
So something that's important to understand is that a purchase order is a request to your vendor with a requested price and a requested quantity of goods. They don't have to honor that. They may say, hey, look, since the last time we talked, we've upped our prices. Maybe we don't have that many of that item in stock, so we'll send you what we got. They may have changed shipping providers and the shipping charges are different. So the thing is, when you convert that purchase order to an item receipt or a bill, you can at that time make changes. The purchase order is not posting, the bill is posting.
Yeah, I'm always thrilled when I get questions about purchase orders, because often purchase orders get overlooked. But a purchase order is a great start to your transaction flow, and like Chris said, don't be afraid to make a change to the purchase order or even to the bill once it comes in. They're not set in stone.
Oh, that is good to know. So our next question is from Kalena, and she is using QuickBooks Online, and she sells in person using a Square reader, which for those of you who are not familiar is a little point of sale device that hooks into a mobile device. You may see somebody using it at like a farmer's market, or even like my hairstylist uses them if they don't have a full-on point of sale. So Kalena is using a Square reader, and she's having trouble understanding how the undeposited funds should be taken care of in QuickBooks Online. She said they're showing up on her balance sheet in a huge number, and her CPA is not happy with her. How do we make that CPA happy?
So undeposited funds can be a great feature when it's used properly, but it's a big mess when it's misused, and sometimes it can be misused, inadvertently, completely honest mistake. But it's definitely a red flag when there's a balance in there. And Chris, feel free to jump in when Square's involved. But undeposited funds, when you're receiving payments, you might notice you have a choice of what account it can go into. Typically, you'll drop it into undeposited funds, and at the end of the day, take that whole big group and move them to your bank account. Sometimes that step gets overlooked, and they just sit in undeposited funds. And then you may be working with your bank feed or downloading your Square information and see all this money coming in for the day and have that going into your bank account, and then you just double counted your revenue. So you really need to be careful and look if there is a balance, why there's a balance in there.
Yeah, exactly. I have a feeling that there's a bank feed set up for the Square and the revenue is being double booked. The other thing that I'd like to interject about the undeposited funds account is the idea behind it is that it's like a virtual cash drawer and a cash register. So in a cash register, you get sales throughout the day, the cash builds up in the cash drawer, and then at the end of the night, you take the money from it and deposit it into your bank account. And that's exactly how undeposited funds is supposed to work. That money sits there until you have time to make a deposit. Once you make the deposit, you move the money from undeposited funds to your bank account.
Yeah, that's a good concrete example. I joke about that. It's kind of like your desk drawer also. I mean, we're talking about a Square feed. Same issues can come up with checks. You get 5 checks during the day. You can put them in your undeposited funds, but what undeposited funds helps you do is mirror what really happens at your bank. So you're just going to see one number for that day on your bank statement, and undeposited funds lets you move over all of those little transactions throughout the day into the, as one transfer, and that'll look like what it does on your bank account, because I'm sure everybody's real motivated now to reconcile following that earlier question, and undeposited funds helps streamline that process.
Yeah, so specifically for this person, they should dig down and look at when they're actually making deposits into the bank account and have deposits from the undeposited funds match those, and then your CPA will be happy.
Great. Well, hopefully.
And I didn't.
Go ahead, Susan.
I see a lot of times with the bank feeds. Bank feeds in QBO are a fantastic feature. It's one of my favorite things about QBO. But I find often I end up telling people just to ignore they got that transaction flow covered elsewhere in your QBO file. Do you see that a lot?
Yeah, exactly. The thing about the bank feed is you can't just turn on and download everything from the bank feed. You still have to drill down into it and figure out what revenue already has a sales transaction in QuickBooks, what expenses are already on a bill in QuickBooks, and ignore or exclude those from the bank feed. And some people think you can just turn on the bank feed and it'll magically all flow in, which that is definitely not the case.
No. So we had a question from Perry, kind of going back to what we talked about manufacturing and assembled items with multiple components, but he's using QuickBooks Online. So how would he handle that? As we mentioned earlier, QuickBooks Online does not have as complex inventory capabilities. So what tips would you have for Perry?
Get out of QBO?
Okay.
Yeah, unfortunately, QBO does not handle group items or assembly items. It cannot handle any items that have a bill of materials. You're going to have to go to, QuickBooks Pro, Premier, Enterprise. You may want to talk to a ProAdvisor to help recommend you what version would be the best fit for your business.
Absolutely. Okay, we have a question that just came in from David. He said when an item is sold online, specifically with eBay or Amazon, those channels only allow for one tax rate to be set in his state, even though his state charges different taxes per county. What is the correct way to adjust the amounts so the state is getting paid their proper taxes, they're not counting those in income loss, and an income can be taxed upon? So who wants to talk about sales tax jurisdictions?
I guess I could tackle that one. So taxes are one of those things that are a headache for everybody. So if your eBay or Amazon cannot calculate the correct tax rate at the time of sale, your life is a little more difficult. It is correct accounting to record the sales transaction in your accounting software to match exactly what your customer paid you. So maybe Amazon defaulted to a 10% tax rate, right? And really it should have been a 5%. So your customer paid $10 in tax when they really should have paid $5. Well, what you need to do is make an adjusting entry that takes $5 and hits your sales tax liability account and also hits a sales tax adjustment account. Now, hopefully, the sales tax that they're being defaulted is kind of like in the middle, so that that adjustment account eventually isn't like too big one way or the other. And then you would just adjust that against your income at the time when you pay your taxes, be it like quarterly or annually. Do you have a different opinion on that at all, Susan?
I think it can be a painful process. If you've got QuickBooks set up properly to do the sales tax liability reporting, it'll compare the sales tax collected versus the sales tax liability, and that's where you'll figure out your aggregate difference. Behind the scenes, it'll do it on a transaction basis, but you can look at that report, which, not everybody does, but you can look at that and see, where your differences are, and then know, what to be submitting to each state. I know California and New York are particularly difficult because it is by county, and then there are also, third-party add-ons for sales tax that you can get as well.
Yeah, that's a real good point, Susan. We partner with Avalara, who's one of the best in the business for figuring out sales tax. Ideally, they would bolt into your shopping cart, but I know that not all shopping carts are compatible with them. If that's the case, they do bolt into our Unify Enterprise product, and it will make those adjustments for you behind the scenes so that your sales tax liability account is correct.
And I have seen plenty of shopping carts that will calculate on the county level, so I'm kind of surprised to hear that Amazon's not doing that as well.
Yeah, that person may actually just need to upgrade to the next tier of Amazon seller. It's a paid thing. And then I think you get that variable tax feature, and you're also able to assign specific SKU numbers to your items rather than just having Amazon assign them randomly for you.
And Chris, what does that do?
It's the next tier up. I'm actually not 100% sure what it is, but I've seen it in some of my clients, and I'm like, oh, how'd you get those features? And they're like, oh, we just pay for it.
And Chris, can you talk about the SKU assignment and what the advantages are to paying for that next level?
Yes. So it is always ideal to have a common naming convention for your items across all sales channels and in your accounting software. so that, SKU 1, 2, 3, 4 is the same in QuickBooks, for instance. It's the same in Amazon, the same in eBay, the same in your own website. The reason being is it can be very confusing to a new hire, for instance, to learn all these new SKUs everywhere. Also, a lot of times a SKU you create will have a language built in so that when you glance at the SKU, you can easily determine what type of item it is. Whereas if Amazon just randomly assigns a string of numbers and letters, it's real hard to figure out what the item is, especially if you can't see the name or description of the item.
And Chris, we talked about item naming conventions in one of our Christmas in July webinars earlier this year. You and Raphael, our other QuickBooks ProAdvisor, talked about setting up naming conventions. So if anybody hasn't watched those, you go to webgility.com/webinars, and those are also free on demand. All right, so we have a question specifically about our software from Paul. He changes price levels sometimes in his shopping cart, and he's using QuickBooks Enterprise, and he wants to know how our software, Unify Enterprise, handles that syncing. Chris, you want to talk about that?
Yeah, sure. So just like if you're manually entering a sales transaction, you can go into the price field and just manually change the price to anything you want. Our software looks at what the price was on the sales order in your shopping cart, and whatever that price is, it overwrites the price on the sales transaction in QuickBooks. So it really doesn't matter what the customer was charged. That's up to your sales cart to figure out. We will accurately record that amount into your accounting software.
Great. I know that's a often used feature of Unify Enterprise. So our next question is from Adrienne, and she's using QuickBooks Online, and she wants to know about inventory management. And she asks, how do we transfer stock from one location to another? Does Webgility software Unify support bin or aisle numbers or custom fields, and where could she add that? Chris, you want to talk about that?
Yeah, so transferring inventory is in your accounting software, and you just do a transfer inventory transaction. That's how that's handled. As far as bin locations, if your item always gets pulled from the bin location and you just want your pickers to know where to go, I would include it in the item description field in QuickBooks. And so when ECC transfers that sales order into QuickBooks, it uses a QuickBooks item description, and your pickers will be able to see where the bin location is right there in the description. If you pull from multiple bin locations, that's a much more difficult situation, and you're going to have to use the advanced inventory feature, which you're already going to need to use if you have multiple inventory locations to track those multiple bin locations.
And that advanced inventory is part of QuickBooks Enterprise, correct?
Correct.
So you're saying that maybe QuickBooks Online is not robust enough for Adrienne if she's got all this
Definitely not.
Okay, that is good to know. We had another question about inventory from Letitia. She's using QuickBooks Pro or Premier, and she wants to know how to manage several inventories with multiple warehouses or stores. Susan, you want to take this?
Yeah, she should stop looking in Pro and Premier because she's not going to find it there. Back to what Chris just said, the multi-inventory tracking locations, that's an enterprise. So if you're if you think you have that need, I think you'd be happy with advanced inventory because not only can you do the multi-locations, you can do the bin and aisles tracking, you can do barcode scanning. So often what I see is if someone has a need for one of those inventory features, they also have, on their wish list some of those other ones, and you might just get to a much better inventory place by making the switch.
Good to know. Good to know. Seems like inventory is a hot topic right now. We just had a question come in from a Leonard. He's using QuickBooks Point of Sale. So for those of you who aren't familiar with that, that is the for retail stores who have a physical brick and mortar retail location. And he's using QuickBooks Point of Sale and wants to know how to calculate inventory turnover.
Inventory turnover is how long it takes you to sell through your current stock of inventory. There's not really a built-in report in QuickBooks Point of Sale for that. what you're going to want to do is run a report of your sales by item, and you're going to have to also know what amount you normally purchase that item in. So if you normally purchase by a case of 100 items, you're going to want to see how long it took for you to sell those 100 items. Now, an important thing to also think about with the turnover time is what's the lead time, meaning when you submit a purchase order to your vendor, how long does it take for them to fulfill that PO? And you need to add on the lead time to your turnover time. That allows you to know how far in advance you should submit a purchase order for how many items to your vendor.
Susan, you have anything to add? Or
No, that was a good summary. Also, for the point of sale user, I mean, Chris brought up some really good points about lead time, and there is a place where you can actually set reorder points in point of sale, and you get a reminder. And actually, on that note, you can do it in Pro, Premier, and Enterprise as well. So if you're not currently setting reorder points, you probably want to get that going for all the the reasons that Chris just mentioned.
great. So it seems like this, earlier we were talking about, inventory assembly items, and that is apparently a common concern, because we have another great question about that from Nancy. And she wants to know, can I use Subassembly to update the cost of an item if I need to move funds from the work in progress account to blend with cost of an item once the project is completed? And she is using Enterprise.
So this is some pretty advanced QuickBooks.
Yeah, there might be.
She's talking about right here. I don't know how deep we want to get. In a nutshell, yeah, you can create a labor item or what was a work in, so yeah. I'm not sure if that's labor or if that's overhead. Either way, you can create an item for that linked to a clearing account for labor or overhead, and then periodically you're going to want to adjust what is in that clearing account from either your whatever overhead expense account you have or your payroll expense account, and that's how you kind of pair those costs to the building of your items. That's something you might have to take offline. Don't want to glaze over anyone's eyes about that. It's a little a crane, I would say.
Yeah, that sounds complicated. Again, I'm always curious when we get these questions. I want to know what these people are selling and what they're doing. Sounds like our audience has some really interesting, complicated businesses, and that's always great to hear about.
Well, basically, she's trying to build in the cost of labor or maybe the cost of what it costs to run the warehouse into the cost of goods sold, which is great insight into business to know how profitable these items are.
Yeah.
But it is a more involved accounting thing. You kind of have to do a workaround in QuickBooks. If you really want to know that and you have the money for it, you may want to move into NetSuite or a more advanced accounting software.
Good to know. So we had a question from Kindle. She is using QuickBooks Enterprise, and she wants to know about recording advance payments, either from herself to her vendor or from customers to her. So what do you recommend in that case?
So when I hear advance payments, another term for that a lot of times is a deposit. So in the case of you paying your vendor a deposit, you just simply write a check to that vendor. That's going to create a negative amount in your accounts payable that can later on be applied to a bill that they send to you. And it basically works the same way for a customer, except for you just receive a payment from the customer without there being an invoice created yet. It creates a negative accounts receivable. When you do create that invoice because you've shipped the products out finally, you then apply that payment or negative accounts payable or deposit to that invoice. I hope I made sense on that one.
I think you did, and I think that you really simplified that whole process. It's a really good, easy way to do it.
Great. So we have a question from Bonnie. Bonnie is using QuickBooks Online, and she wants to determine which products are the most profitable.
Well, QuickBooks Online, I think Chris and I might have, expressed our opinion on reports on that. QBO does have some reporting limitations. I don't think you're going to get exactly what you want out of QBO. Is there anything, Chris, in Unified directly that can do that?
So if you have Unified Desktop, it automatically is going to keep track of your total sales by item. So it will show you the top 10 items by revenue for any given period of time. So it's not quite item profitability, but it helps you know what your top sellers are.
For sure.
For those of you in desktop, you can get that easily with the sales by item summary, but you can't get that close. Yeah.
Okay, good to know, good to know. We have an interesting question from Tina that just came in. Tina says, why can I not get an accurate amount for her sales per week with regards to assembly items? Any ideas on that?
I think that, again, that's kind of a complicated question. I think we need to take a look really at what she has in there. Assembly, so much can go on with an assembly and or go wrong with the setup. So I think you'd really have to drill down for a specific period of time and research where you think the variance is coming from and then look to the setup behind it.
Yeah, there's definitely some sort of a breakdown in workflow there. There may be negative inventory or inventory that's not the correct amount to create the assemblies, so assemblies are getting thrown into pending builds. It's hard to say, though, without actually digging down into your company file.
Sure, maybe that's something you can take offline with Tina. We have an interesting question from Andrew, who's using QuickBooks Online, and he has some discounts for payments, so 2% discount if you pay within 10 days, for example. And the way he set it up is that he created a bank account called Sales Discounts and applied the difference to that account. And he wants to know if that's the correct method or if you think there's a better way to do it.
That's a creative method, and you do need to get creative because QBO doesn't make it easy to apply a discount. You want to make sure in your company settings that you have the discount enabled so that you can put that on your vendor invoices. And then, there's also, Chris, I feel like it's a new feature. There's a box you can now see at the bottom of the vendor invoice for discounts. Often I end up having to go back to the original invoice and stick a discount just as another item on there that's reducing the total. But discounts, I think, are a little frustrating in QBL. So his workaround is not that bad.
Yeah, it seems to me like he may be doing that because he wants to see the total amount of discounts that he has given over whatever period of time. So that may be a good workaround. Otherwise, I typically just tell people to enter the discounts into the discount field in QuickBooks Online. But again, because it's simplified accounting software, that may not give you all the information you really want to make managerial decisions about your business. It'll just make sure that the discounts are recorded properly so that you can file taxes at the end of the year.
Great. So we had a question from Teresa. She's using QuickBooks Enterprise. And Teresa wants to know if there is a vendor report to show how much you've spent with a certain vendor for a certain time frame. Are you guys familiar with any report that would do that or any?
Absolutely. And you can even do that in QBO, believe it or not. Yeah, there's just if you go under the vendor, under reports and vendors, there should be, it's like, expenses by vendor. It's a very obviously named report. The key is that you need to make sure each and every bill and check that you're writing to a vendor is assigned a vendor name. And then going, back to my theme I keep bringing up about bank fees, often when information is downloaded, that vendor name is not populated. So if you're not populating, it's never going to be assigned with that vendor, and you're going to miss some of the reporting capabilities that QuickBooks can offer, like that the expense by vendor report.
Good to know. So we have one final question. So we're getting down to the wire from Linda. She's selling on Etsy and often needs to refund overcharges on shipping. And how does she correctly account for this in QuickBooks?
So one thing to understand about shipping is there is the amount of money that you charge your customer to do shipping and handling, and then there's the amount of money that your shipper charges you to actually deliver the item. Now, these two amounts are almost never the same. You could have free shipping for your customer and you build those shipping expenses into the prices. You could charge, $10 shipping and handling on everyone just to make sure you for sure cover your shipping costs and maybe even get a little extra in-pocket money. It sounds like what Linda's trying to do is charge her customers exactly what she gets charged, which while that sounds nice, it's going to cause you way more headache than it's worth.
Great. Okay, well, it looks like we are just about out of time. Thank you, everyone, for joining us. Chris and Susan, thank you so much for sharing your expertise today. We really appreciate you guys being here for everyone to pick your brains.
Oh, it's always a pleasure working with Susan. She's just such a talented ProAdvisor, and it's really fun to be able to hear her opinion on a lot of this stuff.
I mean, she's a top 100. You can't really beat that. Sorry to embarrass
I'm too embarrassed to even comment.
Well,
but Chris, you know what? I appreciated your answers, and I felt that yours were just really, concise for the users. So, and you brought all of, the online experience to the table on that. So I think it was a good combination having both of us together.
You guys.
Great questions from the audience.
Yeah, thank you, everyone. Your questions were great. After we close the webinar, there will be a brief survey, and we really value your feedback. It helps us improve our future webinars, so please take that. It's very short. You can also register for upcoming webinars and watch previous on-demand sessions on our website at webgility.com. I'm Amy Goldfine-Connor, and this has been Ask a QuickBooks ProAdvisor.